Hey guys, this is Joe, founder and host of Startuprad.io. As you guys may already know, I've run this podcast full-time since January 2021. I'm very happy to announce that Anchor FM is my sponsor for this podcast. If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free and it's easy to use, even for a newbie. They're creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started.
Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany in English only. Right now, as you can tell from either the sound or the looks, I'm right now traveling, seeing friends and family shortly before Christmas. See, ugly Christmas weather. And just want to give a big shout out to our enabler, investinhessen.com. Without them, it wouldn't be possible to do this. Go down here in the show notes and learn more about them. I would say thank you to all the guests we had in 2019. You guys are amazing. You're now going to participate in a real tradition, so to say Christmas tradition of Startuprad.io. Every year I talk to a lot of people, get their input, invite a few guests, and we get together and discuss the startup news, especially fintech news from the last year. Usually it ends up like I'm doing a lot of preparations, get all the news together in the show notes, and then my guests start discussing. And actually that's so fascinating. So I don't want to interrupt them, and we usually get a talk show out of it. Right now, it's the 25th of December. This is going to be published. I hope you enjoy it. I hope you enjoy Christmas and the New Year's Eve. And since this is a very special time around Christmas and New Year, we're going to interrupt a little bit our regular publication schedule and publish more than the usual amount you'll see on our YouTube blog and on your favorite podcast or streaming service. Looking forward to see you again in 2020, where we have a lot of plans. Merry Christmas, Happy New Year, Frohe Weihnachten, Guten Rutsch, Feliz Navidad, Shanganje Kwaila. Bye bye. Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Right now I'm here with 4 other people split across Germany and the world from the Middle East, and we are doing right now a live recording of the FinTech review. So forgive me if there's some trouble with the settings of the Skype screen. We just already had problems with that, and I tried to correct it. Let's go to our guests, guys. Hey guys, here are the troubles I've been telling you about, because at one hand the video resolution jumped, and with it the windows, as you can see here in the video, as well as we had some trouble in the audio because sometimes it sounded pretty much like this.
The bank say hey.
So I decided to go with the Skype recording. I started a few minutes into all of the discussion. You only missed the introduction of the respective interview partners, as well as the start of the discussion concerning neobanks versus incumbent banks. We start there almost in the middle of the sentence. I'm very sorry for Frank. He's been added by the automatic Skype recording. Pretty small down here, but nonetheless you could see him, and what he says is audible.
Beside the fact that we have a couple of hundreds. So I would still say we are in a very, very early phase of the whole change in banking. The traditional banks still stand. They still have a relevant balance sheet. They still own many customers. But you can see here and there that especially the large platform players, so especially now Apple in Germany, once they enter the market, they gain fast traction on the usage of their service. And to me, if I then look and think about fintech, what fintech basically has done so far, it wakened up and prepared for the large platforms. And banks now understand that there is a real threat, but the real threat comes when the large platform apply services, and the whole thing obviously starts with payments. While it's very difficult to earn money with payments because you need billions of transactions in order to make a profitable business out of it, right? And therefore, let's say, I would say we are still in very early phase, but let's say the party of the first 3-4 years is a little bit over right now. Many fintechs see how difficult it is to develop a sound banking business, especially, as Paolo said, if you don't have a clear understanding of your profitability and how to achieve profitability and also scale it up.
Exactly. I would just not say profitability, but how to achieve it, because it is clear that when you are a startup, you may not be profitable for a while. That's okay. But you need to have a consistent strategy, and you need to be capable of explaining the strategy to understand how to grab a higher margin relationships with clients. And that is not being, if you like, an Apple Store for APIs or a hub for financial products, because this is not the way most of the people consume financial services so far.
Yeah, I agree. I call it the path towards profitability. If you're a startup at some point in time, you need to know what the path towards profitability is, because otherwise, at some point in time, people will pull the plug.
One thing I want to differentiate here, you've talked about partnerships and relationships between fintechs and corporates. There's the big divide here I'm seeing out there. There's like one group of startups that are basically just software vendors. Like if you take a look what Clark does with R&V insurance, they're basically selling tailor-made versions of their product to those corporates, and that's not a joint innovation partnership, whatever you call it. And then there are these, let's say, intrapreneurship kind of events where startups go into corporates and basically just sell the product outside of the corporate, like with ING had that with Smartsteuer, I think. So there's different models out there, and they are just by the way this works, like by the way the fintech boards on, completely different types of beasts. Like if a large corporate goes out there and is looking for a solution and has like 5 to 10 startups that are in the space, then that's kind of a vendor relationship, and then we're not talking about any fintech innovation kind of sense. We're talking about somebody just wanting to buy a solution. I think that's past just fintech, what we are usually used to talking about. That's established companies selling a product. And what I'm finding really interesting is that it's a sign of maturity that is happening out there with these different types of industries. It happens in our industry. It happens in the industries of insurance. It happens with lending. Like you've seen that with, I think, Vamo, that have built a solution back then. They are now sold last year or so on. So that's something that has changed, and we will see more of that because the solutions, like the categories, doesn't become much wider. You don't see like 10 different types of fintech companies coming up next year, as you've seen the past 2-3 years. But you rather see a professionalization of how to sell those, how to go up market.
Luka, you are running a fintech that is also running a platform, or you co-founded one. You also got bought by Finly. You also got bought by talking about platform, new types of fintechs. Talking about platform, new types of fintechs. And would you consider yourself or as a software vendor or something as a bank or as a software vendor or something in between?
Yeah, I mean, so I'd kind of look at it as the conversation was earlier, the types of fintechs that are out on the market. So there's the ones that are trying to essentially find product market fit, where they're building a completely new solution, like let's say a personal finance management tool or a PFM, right? Versus an existing product that just made much better, which is, for example, a Penta, right? So, Deutsche Bank and Commerzbank already basically do provide a bank account, but we're fighting more on the execution risk. Our business model is based on. It's not necessarily based on a product market fit, right? So I think that the first way to look at it is, are you building a fintech that is about execution risk within the team, or is it about product market fit, right? Because we're not recreating the wheel, or essentially it's not very creative, if you want to put it very bluntly. On the other hand, our relationship with, we're definitely the execution risk type of company is what I want to emphasize. The other part of the piece is, are we a platform? Are we a bank? How do we look at it? So for our customers, we're the bank. Our customer support is done by us. We charge our customers, so everything is going through us, even though we do have Solaris Bank in the background. But the reality is that Solaris Bank is basically our outsourcing partner that develops and builds stuff for us. So Solaris Bank has a couple of dozen people that actually mainly, or if anything, only work on Penta stuff, right? Because we are their largest SME banking partner, both for onboarding as well as for different products. So the way I think it's irrelevant how I look at it. It's more important how the customer looks at it, and it's a pure bank to business relationship.
I really feel Paolo wants to say something about it. He was moving on his seat, right?
No. I was listening carefully.
So yeah, I think that's really the crucial difference. But I find that the conversation earlier was interesting about I keep repeating the execution risk, because a lot of these 200 fintechs died, some of which died because of execution risk, which is fair, and it's the name of the game. And the other ones that died also probably died because they were building something that people simply didn't need. So it's really finding what do people need, and either making it better, like in the Penta case where we just basically copied an existing business model and made it 10 times better, or or you go into the other path. So
what do you guys think are the solutions the clients will need from especially fintechs in the future? I would guess Luka says a good SME banking. I would say Mario says a good billing, invoice, financial management solution. But what would Frank and Paolo say?
Well, I go first. I think that clients need transparency across the board, whatever is the relationship with a fintech or with a banking and insurance institution. Transparency means understanding the cost, the incentives, and the consequences of every transaction. And this is where I guess technology can really help, because it might facilitate the industrialization of this process, which is the only one that can generate trust and value for final clients.
Yeah, I have a slightly different perspective. So for daily banking, customers just don't mind. So the Uber or My Taxi or Hello approach is the approach we will see going forward, which basically, for example, means for payments just happen. As you use the Uber, as you use Amazon for buying stuff. The payment method is somewhere in the back. You just don't know once you have configured it. And that is the future of daily banking. And whoever does the service for the merchant, for the shop, for the app, the customers don't know because they are not interested as long as it works properly. Because the brand will be the brand of the retailer. That's for the daily use. But there's a other thing, which is if you have money, and you need to somehow save money and prepare for retirement and all these things, and then it's a different thing. Then it's about transparency, understanding, costs, but also about diversity and risk reduction. So portfolio management, and it's a matter of fact that, let's say, if you look at not only in Germany, globally, there are not so many people who have that actually need because they just don't have money they can invest. That's actually for most of the people the case. And only, let's say, 20% of the overall population are targeted to that, let's say, portfolio methods and other things. But of course, these are the ones who are also will be profitable. And I think, and that's a big difference, over the last 150 years, more or less, banks and traditional banks were the only ones mainly providing solutions to that for mass markets. Let family office and other things aside. But going forward, these solutions will come from the ones with the most trusted brands, and that may not necessarily traditional banks anymore. I think every significant platform player has now a fair chance to get also a part of that share of that business.
There is something that we can say though here, Frank, and is the needed link between the daily banking and the non-daily banking, if you like. I have worked with a guy that ran a little PhD research on 1,000 clients of challenger banks here in Europe. And that research is targeted to understand why most of the people that have a challenger bank relationship don't move the salary there. And a very high number, which is above the 90% of people that responded to the question, why didn't you move your salary there, was because they're not too big to fail. So we don't trust them. So now you see, since payment is the entry point of a relationship, even though payment becomes a bit more contextualized inside the non-banking relationships, if you do not resolve this problem, you will not be able to transform a challenger bank from an hyper-volume business, which can hardly survive facing the competition of uber-volume businesses, which are the Amazon and the Alibabas of the kind, into something else. So exactly this point is where most haven't thought through properly, and that's where most are in the end going to fail their fintech journey.
Yeah, I totally agree, and that's why I believe that the brands which already have the trust are and already have the customer connection, and who are going into financial services are in a very good position. So, for example,
because you see, trust and reputation are slightly different.
Yeah, that's true. But look at PayPal with 20 million accounts in Germany. At this point in time, they don't offer salary accounts and they don't have an IBAN. But let's start thinking if they introduce that into their, let's say, kind of wallet for Germany. I can think of that there are not few Germans who gained enough trust into PayPal as well as positive experience to give them more of their share of wallet.
Good point.
but is this really a discussion? Like you just said share of wallet. Is that really a point where you have more than like your main wallet? Like I'm in talks with our employees below 25. I'm in talks with basically everyone interested in the fintech space that has like all the challenger banks on their phone. I myself have all the Google Pay options there. I always use my main preferred method, and so is everyone I know. So obviously anecdata, but is there really a share of wallet there to be had?
Yep.
I think there's just
because I think there is. Look at today, PayPal just does not offer that I put my salary there, and PayPal does not offer assets, does not offer mortgages. And if they would do it as effective, they don't do it in Germany. Don't get me wrong. They start doing stuff in the US, and they are, for example, they are for SME lending, they are number 5 in the US market. This is really something. And nobody realized that at least nobody here in Europe. So what I'm saying is there are players who may. So right now, as a customer, you don't have the choice because they don't offer the product.
For instance, my main option to pay is PayPal, simply because PayPal
to pay
is gigantic.
I know.
Gigantic masterpiece of a strategy to roll out Google Pay on Android via MasterCard and so on. It was brilliant. And yes, over time, PayPal will go into these markets as they will. The question goes back to who owns the platform. Like, who owns back then in the marketing days, who owns the eyeballs? When I have my phone in my hand, who I'm going to pay with? Who's going to be the first on the screen when it comes to either the payments, but also like the more interesting high margin stuff. Like, if I'm already having my money in my PayPal account or in my neobank account or wherever I have it, is to 80% chance the place where I'm going to invest stuff, where I'm going to park my money, where I'm going to buy whatever solution I'm going to have with that. If I'm already at Comdirect, I'm going to buy my ETFs there. I'm not going to compare that much. The early adopters do that, but the main majority does. So I see this is in that part a platform game that you have to own the mind share. That's what we see on our platform as well.
Yeah, but I think this is forgetting that most of these products like payments, loans, FX, now, like you said, ETFs and things like that, that's all becoming a commodity, right? So, KYC is falling, becoming super easy, KYB as well, right? So all like regulation is becoming much easier. There's more and more products popping up. And, having 5 bank accounts today is much more common than it was 10 years ago, because it's much easier. So I think that I don't even know if it is a platform game. I think it's actually more, who has the best product, and does somebody have tolerance to try 3 or 4 products because it's so easy to get onboarded and to also close the account. So.
Yeah, that's where I was rather going to not platform in the sense that a bank is a platform or a different product is a platform, but rather my phone is my platform, my user interface is my platform. If I have my main user interface on my phone, then it's there. If I'm a browser using SME, I'm mostly in my accounting software. Of course, I would have to say that, but that's what I see as a platform. It just it depends on what state of mind the customer is, because the customer is not always just a private individual who buys his stuff at Starbucks. There's corporates that have their own, let's say, platform where they work from. Some call it SAP. I don't know why, but some buy stuff via SAP. That is something that is currently overlooked, that the user interface is what guides the user. And the product is important, but it's not always the deciding factor, because the user buys what he sees, not what he could technically see if he presses 20 buttons.
Yeah, and that can be summarized as the switch cost. What is the price of switching, right? So.
Yeah, and it is also not. I would guess it's also not one platform taking it all. I think the discussion right now is exactly what we will see. There will be different needs, and the ones who serve it most holistically are the ones who have a very good opportunity to win many customers. So the Apple will not win, let's say, Android users, right? So that's very few. So but within the Apple world, right? If they increase their offering, now they come with Apple Pay and Apple credit card, and if that can be managed in my Apple account, and let's say, and that's my primary interface, then for these kind of customers, Apple has a very good lock-in, including probably a lot of financial offerings, directly, indirectly, combined with your offerings. Yeah. And there will be other things which are driven by others. So for example, Instagram or even Facebook or Twitter, let's say there are people who are living on these social media platforms. And for them, that will be the way they configure also their financial life. And if there is something they have, trust is, from my point or from my experience, trust is repeated positive experience. So the moment you can repeat an experience and it's positive, you create trust. That's why we enter planes, right? Not because we understand the technology, but because we see people going out alive. And once we experience this, and the same from my point of view is true for banking. The moment somebody has good experience on Instagram with banking, and that's they lived for the last 15 years, so the ones who basically raised up with it, why should they not use it if the service is good?
Okay, I think we're mixing up a little bit some concepts here, because we need to understand that when it comes to e-commerce, we can discuss marketing. When it comes to banking and insurance, we need to discuss advice, because the real source of revenues for financial intermediation is the asymmetry of information. And if you position the banking offers on the asymmetry of information line, you have on the left side where is less asymmetrical, so more symmetrical payments. Then you have credit, then you have investing, and then you have insurance, which is the most asymmetrical. What does it mean? It means that if I tell you, click on my app, and I give you 1,000 euros net of commission, 0 interest rate, to give me back the money whenever you want, be sure that a lot of people will sign up. But I end up with a huge risk management problem, which I don't want. We've seen it already with a lot of peer-to-peer lenders in China. If instead I tell you, click on this app and give me 1,000 euros, I will invest into a market risk portfolio. A lot of people out there will start frowning, thinking, I need to talk to somebody, and not many will basically sign up because it's more asymmetrical. So therefore, I need to understand where does the motivation of somebody to comes from when it comes to higher margin banking or insurance solutions? Because if I want to succeed in fintech, I need to digitize the relationship. Making things just convenient, creating a good user experience is okay, but it's not going to lead to a transformation on the way people do effectively banking for the most important elements for their life, therefore the financial services industry. That's why I insist that the platform discussion was not thought through, because it was really product oriented. In any case, all of those platform discussions I saw ended up into marketing of products. But this is not the way people consume, because they call it marketing, but instead is a pushed oriented mechanism that is based upon relationships. They want to do what? Well, they need to resolve the problem that money is emotional. And so far, people look for relationships, which are human, to overcome this emotional element. Now, banks can use or abuse, fintech can use or abuse this element and concept. I hope with transparency that people will not abuse it, but use it for the benefit of clients. But that's exactly the difficulty we have today to see the scale up of fintech offers to become not just Uber volume businesses which can be attacked by big tech players, but to become differentiated value proposition that digitize the relationship with clients. That will be the unicorn.
I think there was something in there which is something that we're currently heavily looking into. There is this trend of Generation Z kids in China that are riding the wave of TikTok to basically create a presence, like they're creating a persona and writing a meme or whatever comes up and already pushing and selling via TikTok products and already do automated in the back end, their accounting. They already get a bank account provisioned at that point in time. Like their whole business, in a sense, just starts and is created on TikTok. I expect all of you to know TikTok. It's something like Instagram, just hipper, nicer for the young kids. That is something that basically is a very, very, very highly valuable business model, because at no point in the chain was there any comparison to any other offering. Like there was no other t-shirt printing company in the chain. There was no other bank account provider in the chain. Like you said, you're using the information asymmetry of how to build such a business completely from the beginning through the end. And via that way, enabling somebody to do something which you wouldn't have done before, via employing financial services, via employing all the digital business models. But in the end, you end up with a financial product. They are lending because they need to they need to pay for the just-in-time production and so on. All of these kinds of products are in there. They are much more expensive than on the open market, but they're enabling them.
Yes, but you see, we are talking e-commerce here, if you like. I have a question for you guys, and my answer. Do you believe Amazon is a distribution channel of products on the internet? It is not. When Jeff Bezos in the 1990s was asked on 60 Minutes, what is Amazon? He said, Amazon is not a distribution channel of books on the internet. So the journalist asked, so what is Amazon? At the time, some of you are younger, Frank is older, so you will remember that he was only selling books. So he said, you see, the publishers are sending me letters complaining, saying that I don't understand marketing because I allow the users of Amazon to put positive and negative reviews. So they say, only publish the positive reviews, right? It's good marketing. We will sell more. And he said, no, they don't understand. And they don't understand because they are not my client. So Jeff Bezos said, I'm not a distribution channel on the internet of their books. So the question is, can a bank be a distribution channel of financial products on digital? So he said, what am I then? I am an advisor of my clients because I help them to understand which is the best book to buy. Because since they cannot touch those books, by adding positive and negative reviews, I create a mechanism that builds trust on the fact that the book will be good. So then he said, the moment I start with professional books and then I move into novels, then I can go forward and I can start selling more products because then I've built the trust. And so I can use analytics in order to optimize the relationship. But you see, in essence, he had to resolve the initial problem of creating trust on people. They never used the medium to do something. Now, for us today is obvious because if you create something on the internet, many people might start trusting that because now they got used to. But at that time, that was not the case. So what happens with TikTok is that these people are basically building trust in a different way, and they're used to do that. So they can buy these products even though they have higher prices because they create that element of participation. But this is way more complicated for financial services. That's what I'm saying, because it doesn't necessarily start that way. In financial services, the psychological play of people is very different, at least when it comes to products with high margins. Now, since those products are getting more and more commoditized, that is the drama for everybody. It's good for the consumers, but at the same time, if you do not build a relationship with the consumers or the banking clients, they themselves will not be able to onboard on digital. So they will be, in a sense, left out. So we need to make sure that we resolve this problem. There are techniques for doing that, but this is not about user experience.
Yeah, I agree and disagree. I had exactly these discussions in 2002 with all the heads of the departments for mortgage, for example. They said you cannot buy a mortgage without having, let's say, a discussion and a good advisory with a banker. And I said that's not true. You can, and by now we know that most mortgages are just bought.
Frank, but remember what I said. The symmetry towards asymmetry. I said payment, credit is loans and mortgages, investment and insurance. Now, when it comes to payment and mortgages, banks are not making money. With zero interest rates, especially in Europe, after the price for risk, there's no value for the shareholders. They cannot even support the risk for those relationships. So mortgages can be very poor because you know you're buying a house and you know that if you pay 10% it's worse than paying 5%. But banks are not making any money there. And there's no fintech that can make money there because interest rates are too low and the prices are too compressed and the cost of capital is too high. That's why all banks are trying to move the other direction towards the intermediation margin. But you need to find a way to make the two together. That is the planning story, because you cannot drop the primary relationship with your clients, which is very sticky. And the sticky relationships are the salary and payments that comes with, the mortgage, right? If it's more relevant than loans in a sense. And then you've got retirement or everything that relates to that. And I can add as well listening, you see, this is exactly the strategy of Goldman Sachs, if you look at that carefully. And that differentiates Goldman Sachs, even though it's a difficult journey, from most of the challenger banks. Because the challenger banks have these problems of having client relationships on payments, but not being capable of onboarding salaries. So having a difficulty of moving up into relationships to sell higher margin products that come with the relationships. But what did Goldman Sachs do? Well, Marcus clearly is a digital onboarding on clients, is like a challenger bank. You've got some small personal loans, so on and so forth. But then they got ICO. ICO is a company that provides payroll for employees, like they have the Google employees. Now, why does payroll matter? Because the moment payment and everything else gets contextualized, you don't see the brand anymore. You will still receive every month an email saying Goldman Sachs email, this is your salary. And when you look at that, you see what people do with the 401k, that is retirement, or health insurance. They have two relevant relationships for US population. But then that is when Apple added the Apple Card, not because it's big technology, but because the moment they have these three pieces, digital payments, the non-banking relationship for the salary, and the onboarding on a challenger bank solution, they can tell the ICO clients, hey, I see you have your salary here and your salary is with this bank such and such. What about you move your salary to Marcos and you can get the Apple credit card? So you see that that's the only way where they can grab primary relationships. But then what they decided to do was to buy United Capital in May for $750 million. Why? Because that is planning. And ultimately, the only way to grab higher margin products with clients revenues is to look at the planning mechanism, because everything else is commoditizing very fast. You see it with the ETF, you see with the passive investing all across the board. That is a hyper volume business, which is very, very difficult to manage these days. So I think that they have a point of view which is consistent, not sure whether they will be capable of onboarding this on digital the right way, but at least to me differentiates from many other banks that simply look at fintech in terms of a technical enablement, but did not understand how to basically cross all of these elements.
Personally, it's sorry, most of the time I've been busy trying to get your windows adjusted. Most of the people who actually will listen to this audio podcast will never see, and I will do my best to actually make people who watch the video also not see it. But basically what would interest me is talking about trust and complexity of solutions and selling them. The position of Luka as well as Mario, because they actually have a hands-on experience in there.
Sorry, what was the question?
My personal question would be something like, how does this calculation, relationship and trust versus complexity does actually play into your product offering? Because I assume highly complex, like ladder swaps or something, is where you need a really close personal relationship and very much trust. So does this figure in what you're offering? Very plain, easy to understand product on your platform, guys?
Okay, I'll go first. I mean, I think it depends what type of product you have. I think inherently, being some sort of bank, you require a bit more trust from your customers than anything else, right? But I also don't want to use, a marketing tool that has a high risk of going bankrupt. So, so it's not only about banking, it's also about any product that you're using. But I think with fintechs which deal with people's or businesses' money in particular, so I mean, for example, like us, we follow the same regulations that a Deutsche Bank does, right, or Sparkasse or anybody else. So deposits are secured up to 100,000. We have the same standards and practices for security and compliance that any other bank does. So I think in that sense, there's definitely, there is not a difference, right? In terms of perceiving it, I think that if as long as you act and talk and actually behave like you should, I think that's something that builds trust. But I think trust is really just built over time. So we definitely have some customers that probably don't join us because of a trust angle, but we also see pretty high growth on a daily basis for customers that do trust us, right, and that also use us as their main bank account. So I think a lot of this comes with time, essentially, where you balance the two out, right?
I would Fastbill has been on the market for a little bit over 10 years now. So we have a little bit different view on this, not in the sense that we don't also see that trust is built over time, but also that trust means something different for the different types of services you provide. Fastbill started out as a simple tool to write invoices. You could also do the same with Word. By now, we do business, we do accounting. Like, if people here doing the accounting actually go looking into your finances, knowing about your finances. So there's a different level of trust. It doesn't have to actually mean that there's money accessible or something. Just the knowledge required to do a proper type of service is sometimes something where trust is important. And so for us, we kind of saw and witnessed actually a reduction of the necessity of trust, especially in the past 5 years. When we started out in 2009, 2010, there was just doing accounting in the cloud was nearly unthinkable. People didn't want to put any paper online. Our friends from the States always called it the German Angst of the cloud. That is something that disappeared now, dissipates. And every year we see a trend towards neobanks, especially Penta, with lots of customers wanting to board on Penta. Or Contest or Holvi or whoever is currently out there. So that is something that is actually of the interest, simply because they don't find themselves served in a qualitative manner by the existing solutions. And what can I actually get out of this relationship calculation is something that starts to become much, much, much more important. You could say the customers not only they started to trust everyone less, and so the trust of a new challenger appearing is just as low as the trust I have of Deutsche Bank. Like, if I go to Deutsche Bank and don't get my loan there, I don't care if I get my loan at Smava, So
yeah, and this is what I meant about the commodity at the end of the day.
That's
a lot of these, yeah. So, but it's also trusting the service, right? I don't think just trusting will somebody go bankrupt or not. I think I would never open a Deutsche Bank account, given that I know the customer service is shit. The products I'll get are terrible. I can't do anything with it, right? So I think that it's more about trusting, does this product help me solve my problem?
Yes.
As we said before, banks might not have a good reputation these days, but a lot of clients trust them because they're not too big to fail. Okay, so you can keep the money there up to the 100,000. Then you might open up 3 or 4 different bank accounts. It doesn't mean that you believe the reputation is nice, but you believe they are trustworthy institutions, at least when it comes to security for domain elements. Whether this is right or wrong, that can be debatable, but I believe that this is what is exactly happening these days in the head of most of the banking consumers. And if you do not resolve this element, you will not be able to digitize the relationship, because ultimately my point is, if fintech succeeds truly, is because it's capable of digitizing the relationship, so effectively you don't need the branch anymore. So far you still need.
I would completely disagree. Like,
that's good.
I really think fintech succeeds because it doesn't overvalue the trust relationship. Like, at the first moment, like, it's all maybe a generational topic, but at the moment in time, you could do ID now, you could do all those contracts online, and you saw the product quality the same or better than you had with your old trust relationship. That point in time was when people started losing the importance of that trust relationship, because you actually found out, hey, I got a better deal somewhere else. Maybe he wasn't looking after me as the way I wanted to. You know, the moment in time I get a better deal with a direct online solution, I start to value my trust relationship with somebody else less. And that is something where fintechs, you look at the most successful fintechs right now, they are not the ones with the best customer service out there. Like, look at N26, which was in the news with, hey, that customer lost 50,000 euros. And, well, it's still one of the fastest growing neobanks. So if you can actually decouple,
how much does it cost
make use of that.
How much does it cost you?
What do you mean?
N26.
Nothing.
Okay, so they cannot go below. So
Sure.
They're very weak. So when it's free, maybe you don't care about the customer services. You get my point here? But then if you have to pay for something, you better make sure that you have a good customer service, so you know to understand how to make that relationship valuable. The two things don't go together.
I would say the customer relationship and customer service is part of the equation of product quality at this point. That's how the customer understands it. And the bar has not been very high to raise that, or to jump over that. So I really think the fintechs that can really work out the best processes to get a cheap customer service, they will win out in the end. I don't think I'm not a number, I know this person at this organization really means something to the generation that's out there working right now in spending money, earning money.
Yeah, I would subscribe what you said. If you look at who was really successful over the last 15 years in Germany, it was ING DiBa. And if you ask customers what they value, and that's unbelievable, they say the best advice. But ING DiBa does not offer advice. But they deliver almost an error-free service. So a highest service quality, and customers experience high quality service as good advice. So that I fully subscribe what you said. If the customer experience is totally seamless in all the fulfillment, and you have a positive, then you think, oh, that's a good bank, or that's a good financial service offering. When we talk about insurance, the moment of truth in insurance is the moment you need the insurance. Do they pay? Yes or no? And if they don't pay for good reasons because of the contracts and all that stuff, then let's say you lose a reputation. And if you pay, even if it's contractually not covered, then you raise. And the question is, how many of these moments of truth as a financial service provider can you generate in order to gain the customer relationship? And I think this is the ones who get that right, whether banks, fintechs, insurance companies, big tech, they are the ones who will run a successful business.
But you see, Frank, it's in your words. They said they gave me the best advice. Now, it is a given that the process needs to be seamless, efficient, and effective, even though when I open an app from an airline, for example, it doesn't work well, I'm asking myself, how can it be that in 2019 they're not even capable of making an app for travel that makes any sense? But it still happens, okay? However, nobody said that it is frictionless. That's why I love INGD. But no, they used the word advice. Now, we should go back, if we don't have time today, in the 1990s when they started to understand what advice meant to them when the interest rate were much higher. But what they had to resolve in terms of being successful and create sticky relationship is the advisory role of the digital play that hits on a very specific nerve of clients of financial institutions, which is different than the clients of Nike, Gucci, or Bose.
That's been very good last words. Sorry guys to really pull the plug on you guys here. I just love the conversation. I've written down a lot of interesting notes, and actually there was less an annual fintech review, more on a discussion of strategy, how to run a fintech, which is also very interesting for everybody who thought this would be an annual fintech review. Go down here in the show notes. I put together what was happening in the fintech scene this year. We're getting very close to 1 hour of recording here. Sorry for all technical difficulties. I'm still learning with that. I'm still a startup as well. Guys, thank you very much for having you. And before you drop out, just one last sentence. What is your expectation for 2024? Whatever the fintech scene, the movies of the next year. Your next hot coffee. Give us a forecast for 2020.
Okay, we just disrupted the year-end fintech review of Startuprad.io. I hope we will disrupt more next year.
I think this is a very nice, let's say, word. I think crypto becomes more and more relevant. So we see a lot of parameters significantly changing. So crypto is becoming more serious.
Luka? I'd actually say that we're going to see neobanks and fintechs opening up branches and things like that. I think that marketing is going to be a bit more creative. And branches may sound a bit counterintuitive, but I think that 2020 will be about alternative marketing, let's call it.
I would agree with Luka here. Just thinking of Amazon opening physical stores would be my analogy. Mario, last but not least.
I think 2020 is going to be the year with a much larger shakeout. We're going to see lots of, let's say, runways running out without being continued. I think we're at the tail end of that curve, and it's going to be very interesting to see what's going to happen there and who's going to try to on the cheap extend around, lower some valuations. It's going to be fun for investors interested to getting in, I think.
Very great last words, guys. It was such a pleasure having you. I would have listened to you for another hour. My timer says we're now recording 1 hour and 42 seconds. Thank you very much for sticking with me. Hopefully you come together next year and we continue our course in how to manage a fintech 101. Thank you.
Thank you.
Bye-bye, guys.
Bye-bye. Thank you.
Yes,
Merry Christmas. Happy
Merry
holidays.
Christmas. Happy New Year.
That's all, folks. Find more news, streams, events, and interviews at www.DACH www.startuprad.io. Remember, sharing is caring.